Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we have a finished three-wave corrective structure and now look for impulsive continuation. In this scenario, your wave 1 is then a leading diagonal, a 5-wave structure, 1, 2, 3, 4, 5, after which we preferably see a short in time and deep in price corrective wave 2, after which we then continue to the upside. Now inside this leading diagonal, we then have 3 finished waves, preferably the high is in for your wave 3 and you look for a wave 4 down. The reason that preferably your wave 3 is finished is because on the 4-hour time frame we can count a nice 3-wave ABC to the upside, and therefore I then have also an invalidation at the high here, 66.5k, as well as of course at the low. Now for this wave 4, we then want to see a 3-wave structure to the downside, which preferably is not yet finished, as a minimum target for a wave 4 would be 61.2k. After wave 4, we then also want to see a 3-wave structure to the upside in 5, taking out the high of this wave 3. So once price moves to the downside a little bit further, hits at least 61.2k, that is when I remove the invalidation from the chart here at 66.5k, and we could be looking for a wave 5 to the upside in this scenario. But what is important in this scenario, and that's the confluence with the other 2 daily scenarios I'm going to show you, is that preferably you're still looking for a bigger retracement to the downside. If we then go to the second scenario, we're looking for a multi-1-2, something we discussed yesterday with Sam in the live stream as well, because he was saying, well, you know, we can have a 1, 2, 3, 4, 5 here, but what's the possibility of a double 1, 2, 1, 2, 1, 2 continuation up because of the base channel being broken? Now, that's something that you can find in the live stream yesterday, but it is definitely a good idea and a good scenario and worth covering in this video. So here we then have a wave 1 followed by a wave 2, and then a more local 1, 2, 1, 2 continuation to the upside, and this is in particular what we spoke about in the live stream yesterday with Sam. Now, what is a bit tricky with the first 1, 2 here is that your yellow wave 2 is 9 times longer than your first wave 1 in time, which is incredibly rare, very, very uncommon, right? The common target for a wave 2 in time is the 3A2 to like a 4 fib time. Moving beyond this starts to lower probabilities, and moving beyond a 6 fib time, and we're at the 9 now, even past the 9, is very rare for a wave 2, so it does impact the probabilities, right? Now then we have, instead of an ABC to the upside, we count this move to the upside as a 1, 2, 1, 2, which is more bullish. So you have a 1, 2, and then another 1, another 2, and you look for continuation to the upside. Now in this scenario, just like with the diagonal, you preferably still look for a deeper retracement, because the common target for a wave 2 is between the 0.5 and the 786 Fibonacci taken from the low to the high of your wave 1, which gives you a target between 62k and 59.4k. The 0.382 is a target, but it is a lot less common for a wave 2, sitting at 63k. Now the 0.382 has been touched. However, what you can see also on my chart is another vertical line, which is the blue line, and that's a fib time taken from the start to the end of your wave 1, comparing wave 1 in time with wave 2 in time. Preferably, your wave 2, and by far most commonly, your wave 2 finishes after the 0.382. However, the low of this retracement at the moment here is made 1 day before the 0.382. So it lowers the probabilities that this is the end of a wave 2, increasing the probabilities that we are not yet finished with this wave 2, and therefore preferably looking for a bit of a bigger retracement still to the downside, but also a new low made, or at least ending this wave 2 after the 0.382 fib time. In the bearish scenario, you're also looking for a deeper retracement to the downside, and in this case we are looking for an unfinished 3-wave corrective structure and still look for continuation to the upside after. Now here inside wave Y, we are then looking for a 3-wave flat structure. So we have a 3-wave move down in wave A, 3-wave B, and then a 5-wave C, where preferably your B is finished, as internally in this wave B, we can count an ABC zigzag to the upside, which is a common structure inside a wave B. Has to be said though, that the most common target for a wave B is actually a little bit higher, 68K to 69.8, the 1.236 to the 1.38 Fibonacci, taken from the start to the end of A. The orange box over here is an uncommon target for B and works with a regular flat. So a regular flat is a 3-wave A, 3-wave B, ending somewhere around this orange box, and then a wave C to the downside, moving below your wave A, which means moving below 52.5K. That would then also be your minimum target for the deepest retracement option that we have, which is then your wave C, finishing Y, and then move to the upside. Now, preferably, your wave Y is finishing between the 382 here and the 618 that I have on my chart, with the 382 being the 19th of October. Now, the confluence between the three is that in all three of these scenarios on a daily time frame, you're preferably looking for some lower prices, a deeper retracement. For this wave 4 in the diagonal, you would like to see a minimum target of 61.2K to be hit. In a double 1-2, you like to see 62 as a minimum. And if you then go to the WXY, well, of course, then you're looking for 52.5K. On the 1 hour time frame, the bearish scenario is an impulse to the downside, where we have a wave 1, 2, 3, 4, and still look for a move down in a wave 5, then a 3-wave corrective structure and another move to the downside. Currently working on a wave of 4. The invalidation for a wave 4 is the 0.618 here at about 65K, and the common target for your wave 4 is between the 0.236 and the 0.5 Fibonacci, taken from the start to the end of wave 3, 63.9K to 64.6K. The bullish scenario on the 1 hour time frame is a finished 3-wave structure to the downside in a wave A, B, and then an extended wave C, moving to the 2.618 trend-based fib extension, taken from the start to the end of A to the end of wave B. It is less common for a wave C to move all the way to a 2.618 extension. It is a bit more common for a wave 3, so it would naturally increase the probabilities a bit more for the impulse to the downside compared to an ABC to the downside. But we still got to be aware that for this ABC, what you like to see is price to move to the upside and hit the invalidation for a wave 4 sitting at 65K. So if price would move towards the upside here, touch the 618, the probabilities increase that this is a 3-wave structure to the downside, which automatically increases the probabilities to still take out this high at a later stage. Has to be said that a 3-wave structure in a zigzag ABC can be part of many different corrective structures, like a double zigzag, WXY, or a flat structure, or triangles, or whatever. So we got to figure out what we get afterwards. But at least move up, touch 65, increases probabilities to at a later stage take out that high. If we then look at the CVD divergences, the bearish CVD divergences we had here at the high played out nicely, with price moving down straight into support as well. This box over here beautifully holding 3 times, constantly having a nice little bounce to the upside. And as price was moving down over here, we did start to create on a 1 hour time frame some bullish divergences with the low here. So we do have a higher low in price, lower low on the CVD. I'll show you in a second on the AGGR CVD chart, and also more locally here, a bullish CVD. Now, as interesting as it looks like the 1 hour bullish CVD, I always prefer to see more local CVD divergences to have a good feeling of the strength. So here you can see on the 1 hour time frame, the bullish CVD divergence here, higher low in price, lower low on the blue CVD, creating that bullish CVD divergence. But of course, preferably on a lower time frame, you see consistent bullish CVDs building as well. And so far, if we go to the 50-minute, you can see we had one little bullish CVD, but you wanna see that continue. So locally, there is actually not too much happening at the moment. There's no divergences anymore. So we got to wait patiently to see what price is going to give us. No? Now, when we look at the news, we do have some news today, Tuesday, 1st of October, 4 p.m. Central European time. So make sure you trade safe around that hour, as it might increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenarios compared to the bearish ones. But also in the bullish scenario, we are preferably still looking for a deeper retracement to the downside. And on the 1 hour time frame, purely based on Elliott waves, the second leg down, this one over here, to the 2.618 extension gives probabilities to an impulse to the downside compared to an ABC. If the 0.618 at 65k is touched, then the probabilities go up for this to be a three-wave structure in an ABC to the downside. Now, wave 4 is preferably not yet finished because of time, as explained. So from an Elliott wave point of view, we preferably wait for price to range after the 1 fib time, which is after the fib time right now, and then finish wave 4 after 10 a.m. Central European time, which is literally the hour I'm recording this video, right? And then we have to keep an eye on signs of strength or signs of weakness, of course, for potential nice trading opportunities. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Waves educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.